So well students, this is the 20th problem, the goods sent at invoice price. A shoe company Kanpur has its branch at Delhi. Goods are invoiced to the branch at cost plus 25%. Cost plus 25 is nothing but cost plus 1 by 4. 25% means 1 by 4. Then it's 1 by 4 on cost. We are supposed to take 1 by 5 on sale. 1 by 4 on cost, 1 by 5 on sale. Branch is instructed to deposit daily all cash received by it in the head office except the petty expenses, which are met by the branch manager from the petty cash amount sent by the head office from time to time. From the following particulars, prepare Delhi branch account in the books of head office at Kanpur. The branch sells goods at invoice price. Stock on 1/1/2018 invoice price 30,000 debit side. Sundry debtor on 1/4/2018 rupees 18,000 debit side. It's called opening debtor. Cash in hand on 1/4/2018 800 will come in debit side. It's nothing but opening petty cash. Cash in hand can be treated as opening petty cash debit side. Next we have office furniture on 1/4/2018 2400 debit side. It's called opening furniture. Goods invoiced from head office, that means goods received from head office. Invoiced from head office can be read as received from head office. 1,60,000 will come in debit side. Goods returned to head office at invoice price 2,000 credit side. Cash received from debtor 60,000 will come in credit side because this amount should be remitted by branch to head office. Cash sales 1 lakh, cash received against sales should be sent back to head office, will come in credit side. Credit sales put an into mark, it will not come in branch account, instead it will come in debtors account. Expenses paid by the head office 7,800 will come in debit side. The three expenses are rent 2,400, salary 4,800 and printing and stationery 600. If you add all the three, you get 7,800 debit side. Petty expenses paid by the branch manager 560. Students, 560 is not the closing petty cash. 560 is the expenses incurred by the branch out of petty cash. So it's called petty expenses paid 560. Depreciation is to be provided on branch furniture at 10% per annum. So branch depreciation should be deducted from its concerned assets. And goods returned by the debtor, that is whatever we sell, the customer has returned back due to damaged or low quality or whatever reason is, it is called sales returns. So 600 is called sales return into mark. It will not come in branch account, it will come in debtors account. Let us see students how to solve this problem. Students, if you carefully observe in the problem, we have opening stock but we don't have closing stock. We have opening debtor, we don't have closing debtor. We have opening petty cash but we don't have closing petty cash. So you need to find closing stock, closing petty cash and closing debtor. Closing furniture can be calculated by deducting the depreciation. So therefore three items are missing in the problem. Opening stock is given, opening debtor is given, opening petty cash is given. But closing stock, closing debtor, closing petty cash is not given. So first calculate closing stock, closing debtor, closing petty cash. Students, this is how you need to calculate the closing stock. Opening stock 30,000, add goods received from head office 1,60,000, add sales return 600, we get 1,90,600. Less goods sold both on cash and credit 60,000 plus 1 lakh credit sales plus cash sales 1,60,000 less goods returned to head office 2,000, we get 28,600. It requires a simple common sense to calculate this. See students, we had 30,000 plus we received from head office plus we received from debtors who returned. So 30,000 is what we had at the beginning. 1,60,000 we received from head office. 600 we received from debtor. So add all the three. Less the goods that are gone due to sale. We sold 1,60,000. So 1,60,000 goods are gone. So minus it. Then 2,000 goods is gone through return to head office. So therefore receipts to 1,60,000 and 600 you add, and whatever stocks that are sold out, that are gone, should be deducted 1,60,000 and 2,000. We get closing stock of 28,600. Next students, we need to calculate in the same manner closing petty cash. Take opening petty cash 800 plus petty cash receipt, we don't have anything, so we get 800 less petty expenses paid 560, then we have 240 balance in our hand. See students, simple common sense. 800 is a petty cash what we had at the beginning, plus we did not receive any petty cash from head office, so nil, you get 800. Deduct the expenses paid 560, then remaining cash in hand is 240. This is called closing petty cash. Third students, you need to calculate the closing debtors by preparing debtors account. So students, to balance brought down 18,000, credit sales 60,000, only credit sales will come in debtor account, not cash sales. So we sell, debtor receive, debit the receiver. Sales returns by the debtor, debtor has returned, so he is a giver, credit the giver. Then debtor have paid 60,000 cash, so credit the giver. So we get a closing debtor of 17,400. This is the branch accounts. To opening stock 30,000, to opening petty cash 800, to opening furniture 2,400, to opening debtor 18,000, to goods received by the branch 1,60,000, and amount received by the branch for various expenses, for rent, for salary, for printing and stationery 7,800 total. Next, credit side, the branch have returned the goods 2,000, the branch have remitted 1,60,000 to head office. Then closing stock 28,600, closing petty cash 240, closing debtors 17,400. By closing furniture, that is 2,400 minus depreciation 240, you get 2,160. Students, till here whatever you did in cost price, no change as it is. Only extra you get invoice price, unrealized profit to be adjusted. That's called stock reserve. So stock reserve should be adjusted in 4 items: opening stock, closing stock, goods received, goods returned. So it should be recorded in the opposite side students. Opening stock 30,000, adjust in opposite side 30,000 into 1 by 5. Goods received by the branch 1,60,000, adjust in the opposite side 1,60,000 into 1 by 5. So you get 6,000 and 32,000, total 2,48,400. Similarly, you need to adjust the closing stock unrealized profit 28,600 into 1 by 5 students 5,720. Then goods return we have 2,000 into 1 by 5, you get 400. So you get a net profit of 23,280. Okay, well students, work out this problem. Any doubts, feel free to ask in the WhatsApp. Thank you.